Imagine the financial relief of significantly reducing the costs of your education, freeing up money you could then use for essential supplies, daily expenses, or even your first investment. It sounds like a powerful way to manage your finances, right? Student tax deductions and education tax credits are two distinct and valuable ways the government provides financial relief for those pursuing higher education. While both aim to lessen the financial burden, their fundamental difference lies in how they impact your tax bill. Deductions reduce your taxable income, meaning you pay tax on a smaller amount, while credits directly reduce the amount of tax you owe, dollar for dollar. The core distinction between a deduction and a credit is crucial for understanding their benefit. A tax deduction lowers your adjusted gross income, or a GI, which in turn reduces your overall taxable income. This means the deduction's actual value is dependent on your specific tax bracket. For instance, if you are in the 20% tax bracket, a $1,000 deduction would save you $200. Education tax credits, however, are typically more impactful for many students because they directly subtract from your total tax liability. A $1,000 credit saves you a full $1,000. The two primary federal education credits are the American Opportunity Tax Credit, or a OTC, and the Lifetime Learning Credit, both designed to make higher education more accessible. To effectively utilize these benefits, it is important to check the eligibility requirements for each, as they vary. For example, the American Opportunity Tax Credit is typically available for students pursuing a degree for their first 4 years of higher education, while the Lifetime Learning Credit can apply to a broader range of courses, including those taken for job skills or graduate studies. You cannot claim both credits for the same student or the same qualified educational expenses in the same tax year, so understanding which one best fits your situation is key. You will need Form 1098-T, tuition statement, from your educational institution to report your qualified education expenses when you file your taxes. An interesting detail about the American Opportunity Tax Credit is that up to 40% of the credit, or $1,000, may be refundable. This means you could potentially get money back even if you owe no tax, providing a substantial boost to your finances. Eligibility for these benefits often depends on your modified adjusted gross income, or MAGI, so pay attention to those income thresholds. Remember, federal tax laws can change, and state tax rules may also offer additional education-related benefits, so always verify the most current information and consider speaking with a tax professional. Ultimately, understanding the difference between student tax deductions and education tax credits empowers you to make informed decisions that can significantly reduce the cost of your education. By strategically claiming the right benefits, you can free up valuable resources, making your financial journey through college or trade school much smoother, and helping you build a stronger foundation for your future financial success.